Hello, beautiful people out there. How you guys doing? Happy Stretchucation Video Day. Today we're going to talk about Netflix and how the breakout happened. Was it coincidence that I knew? Was it magic? Or was it magical price action? And then we're also going to talk about risk reward and why it's important, what you can do to minimize your risk by, of course, using multiple time frame analysis. So, with that being said, let's shrink my face down. What am I talking about when I talk about Netflix? So, on August 22nd, Captain Solutions, somebody I follow and who follows me and runs an amazing AI-based service, tweeted out to some of us and basically said, what do you think about Netflix? To which my response was, here's the tweet. Posting a blog tomorrow with thoughts on the streaming wars, particularly Netflix defending its position. Would love to embed some commentary. Please share your thoughts. So with the Strat, we don't so much do fundamentals, we don't do news, we care about price action. So on the 22nd, I said it's been sideways for months and we are only bullish if above 558, 560 psychological, and 563. No thoughts, just price action. So here's the Netflix charts. So we've got on the far left, we've got the quarterly chart, which is obviously a 3-month chart. Every candle represents 3 months of time. The middle, we have the monthly chart, which you can see it's literally not picked a direction. It's just been sideways forever and basically stuck inside the range of the January monthly candle almost this entire time. We breached it in May, but it didn't go anywhere. And then we have the daily. So why did I say bullish above 558? Well, if we make this real big, we had a 2 up, we had a 2 down. The 2 down didn't go anywhere. So when that happens, what do? We play the winning team. So we want to switch our mindset to bullish because the bears didn't do anything. Also, the market's been going straight up for 11 months now. So we really kind of want to go with that trend as well. So per the strat sheet, which everyone who's watching should know by now, a 2 down followed by a 2 up is a reversal. So the quarterly level, the quarterly level was at 563, which was one of the levels that I mentioned. So let's go down into the monthly. And why was I looking at 558 as the actual trigger? Because we had all these pivots. So we had a pivot high, a lower pivot high, a lower pivot high. And that was the level that tripped and triggered sort of the little baby mini pivot machine gun, which on the daily, you can see them all here. So we had this high was the trigger, the 558, then that one can be drawn and reflected with a downtrend line. But again, we do not trade the break of downtrend lines. We play the break of price action. So, risk reward. Let's talk about that. Let's get rid of. So we know the quarterly reversal. Let's just make it smaller. It's in my way. quarter reversal. Okay, so all right, so I haven't been trading much. As you guys know, I'm doing a whole bunch of live stuff. And this is as good as a setup can get, to be honest, okay? You had an inside day with a 2 down, and someone even messaged me and said, hey, just looking for clarification. It's my good friend Wags who helped me set up my YouTube live, so shout out to him. He messaged me and said, hey, is this a pivot machine gun? And I said, yes, it is, but you do not want to take that trade because we have been sideways for months and we are finally trying to break bullish. So this is not a good setup. We haven't taken out nearby pivots. There's no broadening formation here. I would not short this name, which is what I told him. Okay, so then you get a 2 down, which did not take out magnitude, which means the bears are not here, okay? This is simply corrective activity or a TTO, but I don't like to use that term. I like to call it what it is. So this right here is simply corrective activity. Then you get the mother lode. You get an inside day, okay? And we know we have all these pivots above. So we have that 558, which is going to trigger the long-term participants. We have, I don't have 560 on my chart, which I wanted because I always use psychological levels. They're important. People like nice round numbers. So we will throw that on there. Ooh, I don't know what I just hit. Oh, goodness. Okay, ignore that. All right. So we had an inside day. So the strat is always forward thinking. So if this, then what? So what if we take this, Rob will say, what will this create, negate, or do? So if we take the inside day and up, will that trigger the 558 level? And then can we trigger the quarterly reversal up at 563? Okay, let us make this line white. No, let's make it yellow. So yellow is our daily trigger, which is at 552.60, okay? And we know we've been consolidating for months. These bulls are hungry, they're ready to get in Netflix long term. Now, looking at the quarterly chart over here, based on the strat and what we know about price action, the 2-2 reversal, the target is a new all-time high. So the target is 593.30 and above, but a minimum target of a new all-time high. Okay, so for you long-term investor people, that's the goal. And then it'll probably most likely hit 600 psychological because it's so close. Okay, back to the daily time frame. All right, here it is. Now, as traders, our job is to get in when the setup is there. We execute. Now, sometimes it works right away, sometimes it doesn't. We don't know what's going to happen once our trigger gets triggered. There's no possible way we can. So what can you do? You can do one of two things. Well, there's probably one of a million things that you can do. Once this level triggers, you can enter a small starter position. That way, if it goes right away, it goes and you're already in. I would probably mark it in because people have been waiting, what? 1, 2, 3, 4, 5, 6 almost 7 months for this. It's been a nice tightening range. You can even see, look at this. It's just been tightening. And in my last swing trade video, I talked about that. Can you draw a squiggly line that all is contained and tightens at the end? So, okay, so back to the daily chart. So like I was saying, okay, so you can enter a small position and then you can wait and go drop down a time frame if you want to use the 5 minute, the 15 minute, whatever, to add if it's going your way. If it's not going your way, as soon as you enter, you're only in a small starter position and you can exit if we start coming back through. Because what do we know about candles after an inside day? Most often, you're going to see outside bars after inside days because the range is so small. So you don't want it to just trigger, go up, start failing, coming all the way back through and become an outside day. And you also don't want this much risk. You do not want an entire day as your risk. Well, I don't. It depends what your risk tolerance is. So what, a $7 risk? And to most, that might not be a lot. You know, depends on your position sizing and all of those things. Okay, so let's drop down to a 5 minute chart. Wow. Let's make it bigger. Let's delete this line, which was the day before's low. Okay, so this is one of those examples that triggered and worked immediately out of the gate. So 552.60 was the trigger. So we triggered. So if you would have market bought in whatever you're trading, options are common. And if my chart looks a little funny, a little gappy, it's because I do not pay for live data on TradingView because I get that through TOS for free. So why would I pay for it when I don't have to? So anyway, triggers, bam, and like I say, we don't trade based on trend line breaks. We want that price action. But for anybody who is a trend line trader, you're gonna see, you know, those trend line traders want to get in here. So you have more buyers coming in. Okay, then we hit, what did we hit? We hit that 560 psychological and we took a little break. We had a little TTO, very, very healthy. So we came back, we back tested, and then we hit the target of the quarterly reversal. Perfect trade, okay? So what happened when we got to that 563 level? We had an inside bar, so we had a 2-1-2 reversal, and then the day was done. Okay, so let's talk about risk reward and what you could have done if you missed the initial entry at 552.60. Okay, you want to wait for corrective activity. You want to wait for a, TTO. So once we hit our first target up at 558, we knew we still had a second target up at 563. Now, you don't just want to get in wherever. The strat teaches to enter in on reversals. Let's see if we can do a replay. Okay, here goes the chart replay. So we triggered our last month's high, had an outside bar, a 2 down, another 2 down. So where could you re-enter? We're looking, right there on a 2 down, 2 up reversal with a target of 563. So how do I pause this? There we go. So this is it. So your entry is a break above this high at 559.70, and your stop is the low of this candle, and your target is 563. Let's remove all the drawings. All right. So to make it real easy, your entry, your exit, and whatever that 563 level was is your target. So that's just a way, if you didn't get in from 552, that's a way to get in, catch, some bucks with very small risk. 1 5-minute candle worth of risk. So a $2 risk to make almost $4. That's good. That's 2 to 1. So that is how we use multiple time frame analysis to lessen our risk, because we know exactly what we want to see. We know exactly where it's going. And if it doesn't, then there's something else going on that we don't know about and we want to get out of the trade. Here's another little risk reward example. So we have 1, 2, 3, 4, 5. We have 5 consecutive lower highs, which we know is considered to be a pivot machine gun. So when this pattern breaks, your entry is above this day's high when this candle opens, so above 513. If you're only looking at the daily, let's say your initial stop is here, and we know our target is here, 526. So your entry is 513, your stop is 507. Once 513 triggered, though, we pretty much never dropped any lower. We dropped to 511, so we dropped $2. And then so once this day hit the first target, you could put your stop at the low of the day and then just continue to move it up. Then you get an inside day, so you can add here if you would like, and then that's your next target. Let's do this day. We have a 3, a 2 down, and a 2 up. So the entry would be 515.63, a break above the 2 downs high, and the target would be 519.85. If you're only using the daily time frame, is $10 worth of risk worth a $4 move? No. So don't take it if you're only using the daily time frame. You guys kind of have to figure out what you're willing to risk, how much you're willing to risk, what's worth it, what isn't, but be mindful. One of the worst things I see people do is they'll want to take 2-1-2 continuations where there's just no meat on the bone. I see one right here. Okay, so we have a 2-1-2. So the entry is here at 506.80. Maybe I should make it white. And the target is 509.47. That's not much for a Netflix. So make sure you're picking plays that have meat on the bone. I wouldn't take a Netflix trade for $3. I'd probably get hurt on the spread alone. Okay, I think that's all I got. If you guys have any video suggestions for me, as always, let me know. Oh, hit the subscribe button, and you can turn on a little bell so that way you guys get notifications anytime I make a new video. And I hope you all have a great trading week. The end of the month is coming up, so I'm excited for new monthly candles, new charts, new scans. Somebody requested I do a video on that, and I probably will. So I don't know. That's all I got for you guys. Have a good week. Bye.